We're definitely a miner. We're successful. We've turned this project around. Really, our focus is to grow this company, use the Moss Mine as a platform to become a mid-tier producer.
As an investor, I want to understand what I'm buying into here. How long is it before you start to make money or head towards making money? Hello and welcome to Crux Investor. First of all, thank you so much for watching this video. If you like it, please give us a thumbs up. That helps us understand if this is the sort of interview and company that you think we should be interviewing. You can also leave your comments below. That helps us understand the sorts of questions you think we should be asking, how I think we're doing, and of course, what you made of Northern Vertex. You can catch us as a podcast, a transcription, and an article on cruxinvestor.com. And for our Crux Investor Club members, you get early access to this video and other features. And if you could also click the button in the corner of the screen to subscribe to our YouTube channel. And of course, for more videos like this, click the notification bell. We caught up earlier today with Ken Berry, who's the CEO of Northern Vertex, their TSX-V listed gold producer, their assets in Arizona. They've been at this a while, but recently got into production. They've got a 500,000 ounce resource, not too big, but they wanted to show the market they could get into, be a producer and operate a mine. They've got a lot of exploration ahead of them, been drilling and with some quite nice results out recently, another 60,000 feet to come. That possibly could change their fortunes as they're now finding high grade gold as opposed to the resource, which at the moment is a low grade number. We talked through their business plan, how they've got here, the money that they've raised to date, how they're going to play catch up on that. They've taken on board two significant new hires onto the board. I think the market has reacted very positively to that. We look at their plans for the rest of this year and what the opportunity for investors is. So take a look in the description below at some of the variety of discussions that we've had and the various topics we discuss. Anything interests you in particular, you can click on the number beside that topic. I'll jump you to that part of the video. Otherwise, sit back and enjoy what Ken has to say. Hey Ken, how you doing?
Good, Matt. Thanks for having me on.
Well, yeah, great. First time we met. New story to us, new story to subscribers and followers of our channel and platform, so I'm excited to hear about it. We've done a little bit of reading up, and I also know your CFO a little bit. So, and he's given me sort of a bit of an insight. So, where are you today? Where you holed up? Looks like the office.
I'm in Vancouver today, Matt. We've been in and out of the office for the last month or so, as everyone has the challenges with COVID. But here in Canada, it's been fairly relaxed. We've been able to maintain things, and our mining site down in Arizona has been a little bit more vigilant, and we've gone into a lot of preventative measures. But overall, knock on wood, things have been well. Our operations have been maintained throughout this crisis that we've been seeing worldwide.
Good stuff. I guess would you be glad to be able to get back down there, get your feet on the ground yourself?
Yeah, definitely. Up until I'd say early stages in March, we were down on site about every other week at least, and interacting with the team. And now it's mostly Zoom calls and go-to meetings and such. But we're still linked together on a daily basis.
Yeah. Okay. Fantastic. Well, this is going to be a quick one because I am boiling. 35 degrees here in the UK. No AC. I'm turning a beautiful
wave over in Europe.
It's a beautiful shade of sort of pinky orange, like one of your sockeye salmon. So I think we better get on with it before I melt.
Great.
Can you give us the 1 minute overview of your business, then I'll pick it up from there.
Sure. So Northern Vertex has the Moss Mine, and we're a gold silver producer. We're located down in Arizona, northwest Arizona, fabulous location. We're about an hour and a half south of Las Vegas and 3.5 hours west of Phoenix. We're just 10 minutes outside of the town of Bullhead City, and we're operating an open pit heap leach operation in the Oakman district. So this area has been historically produced about 2.5 million ounces of gold, and had quite a successful history and colorful history dating back to the early 1900s. So we're one of the most active in that region, and we've been active since about 2011 when we acquired this property, and we're currently a producer and with about 150 men and women working on site on a daily basis.
Okay, thanks for that. I'm just looking at your share price over the last 5 years. Okay, it's saying to me that things started taking off in 2016, great in 2017, even half of 2018, and then it kind of some kind of decline. I mean, what happened to I know you're picking up now, and we're going to get into that, but what was the story around that time?
Well, the company acquired the Moss property back in 2011. And as soon as we acquired that property, of course, the market price for ounces in the ground started to fall. So when we acquired the property, we paid about $10 an ounce in the ground. And the market was paying, and this was for a historic resource. And at that time, the market was paying about $120 per ounce in the ground. And as soon as we acquired this property and started getting active on the drill bit, prices started to fall. So as many of your viewers would remember, 2011 to 15 and 16 were pretty tough and challenging times. So during that period, we started to explore. We drilled well over 500 drill holes. We ended up producing a PEA and going on to do a test mining facility. But the challenges were great. Of course, that $120 price per ounce started to fall. We were looking to put out that 43-101 report and capitalize on that increase. But by the time we got our reports out, PEA out, I think prices were paying about $20 to $30 an ounce in the ground. And we were successful, though, at raising about 55 million US from 2011 to 2015. And that was all non-brokered financings, and it was high net worth private banking, primarily out of Switzerland. So we had some good inroads into Lugano, Zurich, and Geneva. And that really helped us develop the property in the early stages and get through to a PEA and then a feasibility ultimately, and earn 100% in this property.
So why the drop off from about mid 2018? What was the market just wasn't interested?
Well, in 2018, we started to commission the project. So we had built, we'd layered on top of that exploration feasibility. We brought in Sprott lending, and then we also brought in Greenstone Resources, or Greenstone Capital, and Greenstone represents 18 endowment funds in the US. So we had raised an additional 50 million approximately to put the Moss mine into production. We started to stumble, and this isn't unlike a lot of early stage startup companies, mining producers. You run into some issues with crushing facilities, recoveries, solution management, the growth of a mining team. And so as we were stubbing our toe in those early days, our share price suffered, and we had to go back, do some additional financings, a little bit of restructuring, and then we overcame those issues. But certainly our valuation suffered during that time, and people, investors, rightly so, looked at us and said, okay, are these guys going to survive and be able to be successful in the long run? So that was where the share price pulled back at that time.
Okay, so I want to be clear on the numbers here. You've raised 55 million Canadian from 2011 to 2016, and another 50 million on top of that. So it's 105 million Canadian market cap.
No, it's been overall, and I'll just ballpark it. It's been about 100 million US for this project.
Okay.
And the investors to date, private high net worth banking, hold about 40% interest. Greenstone Capital holds about 31% interest. And then we also brought on Mavericks Metals to replace the Sprott lending facility. And that was when we were hitting some speed bumps in the early days. We needed some additional working capital. Mavericks knew the project well. They visited us over the years prior to doing the commissioning and construction. And so they said, look, if you ever run into some working capital issues, give us a call. And when we stubbed our toe, we gave them a call. They came in and liked what they saw and said, look, this property's got tremendous exploration upside in addition to about 500,000 ounces we have in the ground. And so they ended up taking out Sprott lending with a $20 million silver stream. And so for us, that was a tremendous opportunity, because our project is 90% of the values in the gold production. We have about 10% of the values in silver. Okay,
so let's just stick with this a bit. Okay, so you've raised $100 million US. You're worth about 130 million Canadian today, but you're in production. That's the good news. So what I'm trying to do is work out, where do you go from here? So that's the picture I need to paint in my mind today from this conversation, because I need to understand how you sort of undo the toe stubbing period of this business and take this thing forward. So can we just start with your track record? I mean, what were you doing before this?
Sure. I'm a former investment advisor, one of the founders of Kootenay Silver. So I'm chairman of Kootenay Silver, was involved with Kootenay from the early stages in 2004, 2005. And the path with Kootenay Silver isn't unlike Northern Vertex in that the initial financings were primarily non-brokered, and then it's evolved into more of a distribution that's broadened with the investment community, and now it's created a situation where there's much more liquidity in. And so from the early days of Kootenay Silver, in about 2010, when the markets were suffering and pulling back, we said, and this was Jim McDonald, who's been a longtime partner of mine and CEO of Kootenay Silver, we said, look, let's identify an opportunity that could be a producing scenario that we could finance and take to production. And so that's what was Northern Vertex beginning. We reviewed countless properties, and we identified the Moss mine, or the Moss property down in Arizona. And so that's when we acquired it in 2011, and the growth began. Okay.
So tell us a bit more about Kootenay and what you set out to do there. And then maybe we'll move on to kind of parallels to what you're trying to do here.
Sure. So Kootenay is primarily a project generator. So it's had, 15, 20 properties at any given time, many joint ventures in place, but it's always focused on its flagship properties. And initially that was Promontorio project down in Mexico. So really Kootenay has had a focus, and the name was derived from the Kootenay region in British Columbia, Canada. But the majority of its operations are down in Mexico, and this was due to Jim McDonald's experience with Alamos Gold, being one of the founders and being on their board for a 10-year period. So that really opened up opportunities down in Mexico. So with Northern Vertex, when we started to look for producing situations, we said, okay, we'll initially look in Canada and the US, and we can broaden that search radius down into Mexico, but we'd like to stay in the Americas. We've been successful at bringing the Moss property from an exploration property with historic resource into production, building a team of 150 men and women. And now the opportunity is sitting with a producer, which is just hitting its stride. We produced about 4,700 gold equivalent ounces, about 4,200 ounces of gold in the month of July. So we're really hitting our stride, and now we'll be exploring the property and starting to expand the resource and look for new discoveries in the area. And at the same time, we're reviewing M&A opportunities, and because we believe we've got an excellent platform for growth here, being a U.S. producer.
Well, yeah, for sure. And I do want to get onto that, because you've got some record numbers, and you know things are starting to motor now. But again, as an investor, I want to understand what I'm buying into here with you, because you talked about being a producer, maybe some M&A and exploration as well, because of the package that you've got here. So are you going to expand the production capabilities here through M&A activity? In which case that's kind of costly, and kind of given the track record so far in terms of the corporate structure and the money raised and so forth, how long is it before you start to make money or head towards making money?
Well, we're making money now. We had our quarterly numbers for the quarter ending June 30th, and we announced record production for that quarter, just over 11,000 ounces, and we're continuing to grow that production. We're starting to hit some significant numbers on free cash flow, and we had $6.8 million in our treasury at the end of June, and that number continues to grow here. So we're definitely a miner. We're successful. We turned this project around, and now the opportunities ahead are really, as I see them and as our mining team sees them, is the Moss mine and the regional property that we have. There's over 150 mining disturbances on our property alone. We've had in the region, we've had high-grade discoveries. So we've got a drill program underway right now to expand our resource and ideally hit some of these high-grade zones the opportunity for internal growth within the company in Northern Vertex and the Moss Mine is there, but we will be looking further afar, and we're getting many inbound calls as well on the M&A front. But really, our focus is to grow this company, use the Moss Mine as a platform to become a mid-tier producer.
Okay, Ken. I mean, you're talking there to me about you're mining, you're getting some good numbers out, but maybe we should talk about those M&A and exploration. I think M&A is a difficult one because you've either got to have something in mind and be able to get it at a cost which isn't prohibitive to you, because most people don't sell the good stuff, do they? And the exploration. So maybe if we just start with the production component. I mean, give us some of those numbers that you've been hitting, because in your PowerPoint's talking about record this and record that.
Well, Matt, you're always looking at M&A opportunities, but you're correct. When you look at these M&A opportunities, you ask yourself, okay, what's the dilution going to be for our shareholders, and where is the value, and is it going to be accretive? So when we're looking at opportunities, we also have to look inward and see the exploration potential of the Moss Mine. And that's something that we're realistic, and we've got a fabulous team working with us. And when we look inward, we see a 500,000 ounce deposit, which we're starting to hit our stride on production. But we've also commenced a 60,000 foot drill program. And this is the first exploration program of this size since we've gone into production. Really the focus for the 8 years previous to our commercial production was based all on moving to production as quickly as possible. Now that we have that 500,000 ounces, we're in production, we're hitting our stride, we've commenced the exploration program. And what you'll see with these initial results is that we in fact are hitting high grade, which runs parallel to the Moss Mine. This is a significant drill program and results. It starts to show that we do have high grade that's indicative of the Moss Mine and the open district. So historically, this district had high grade discoveries, and I believe that we could be on to some high grade, and it's about 500 feet from our mining pit. Now, in addition, we're also stepping out with our drill program on strike about 1.5 kilometers to the west, and we seem to be getting good results there. We're stepping to the south, another Moss lookalike system, and we're hitting results there as well. So really, we've kind of achieved our goals here threefold, which is to find high grade, step out from the Moss Mine, and add ounces. So we're pretty pleased with our program to date.
I mean, you're also quite lucky that the price of gold is so high, because your AISC is what, just over $1,000? So you're making money. You're making money.
Yeah, we're just over $1,000, Matt, and we've got cash costs in around 860. We've got some long lead time investments that we'll make this year, but overall we have excellent free cash flow. We're moving. Our production is advancing and increasing quarter over quarter into rising markets. So we couldn't be more pleased.
Okay, so talking of AISC, I mean, what are you doing about driving down costs?
Well, Matt, now that our production is ramping up quarter over quarter, we're looking at driving down costs, and specifically we're implementing some measures such as the power line. We're bringing a power line online in early September. That'll replace 8 generators that burn up to 10,000 gallons a day in diesel. We're also looking at moving from a 1/4-inch crush to a 3/8 crush. This increased size can increase our throughput by up to 30% and result in a cost savings between 10 and 20%. So that is significant. So there's a number of measures, solution management system, ILS system as we call it, which allows us to apply more solution to the ore and recover the gold and silver much faster. In the feasibility study, it talked about 120 days to get a 60% recovery. We're down to 45 days to get 60% recovery with an ultimate recovery of 86%. So these measures will be put in place here over the next 6 to 9 months, and that's something that's going to drive our AISC down.
Okay. I mean, obviously, with regards to the results which come out recently with the high grade area, that's going to have a massive impact on you. But before then, before you got those numbers, had you got a target in mind with your low grade? Were you aiming to? Did you think it possible to get under $1,000?
Yeah, we think it's possible to get under $1,000. We have some long lead time investments that we'll be making here over the next 6 to 9 months. But those are going to drive down our AISC, drive down our cash costs. For the next year, we figure our cash costs will be in around $850 to $950. After we've implemented these optimization measures, you'll see that rate drop down significantly.
Yeah, I bet. But you've kind of got this kind of low grade bulk play at the moment. So the announcements that you've made with regards to this high grade finds, I mean, what more are you going to be able to tell us, and when? Because that could drastically change your numbers. I mean, really significantly change your numbers. So what's the process that you are going to go forward with the 60,000 foot drill program?
Well, I think as I mentioned, our focus was always to move the Moss Mine towards production. So now that we've achieved that production, we've invested well in excess of 100 million US. We're sitting at about a 90 million US market cap, and we're hitting our stride in production. I believe the next value proposition is in the exploration and in growing this deposit well beyond the 500,000 ounces. We have a goal of doubling the resource, and in that process, we want to identify some of these higher grade zones, and that's, I believe, what we have just achieved is we've shown the market that there is in fact high grade on the Moss Mine. Okay,
I get it. Like 500,000 ounces is nothing really. There's not a long mine life. The costs are toppy. They're over $1,000. Your AISC is over $1,000. You need to kind of drive that down. I appreciate you showing the market that you kind of route to market. You have got this thing going, but now you need to feed it. You need to extend the life of mine. You need to grow that resource. So that's what I'm interested in understanding, how you do that. Is it all coming through exploration? And if so, what are you doing this year? What do you think what's the actual 60,000 program look like? What are you targeting? The high grade stuff or more bulk?
A little bit of both. We're looking to add ounces immediately close to the pit, but we're also identifying high grade ounces in that exploration program. So this program's, as I mentioned, it's got 3 different objectives, but ideally we'll be adding ounces. Last time we drilled 14,000 feet, we added over 120,000 ounces. That was last fall. So this 60,000 foot program is expected when it's complete to follow with a resource calculation and increase that resource that we currently have.
It's been a long road for this company. You've been in it a while. You've probably been diluted down over the years, but you're still buying shares in the open market?
Definitely. We've had financings in the past as high as $1.25 when we raised over 25 million. We had a high of $1.60 to $1.80. We're currently sitting in around that 45 to 50 cent range. So we're family and friends, and we're all in on this.
What's your average
price? My average price probably be in around 35 cents, 40 cents. I've been at this for the last 9 years. Our investors primarily average would sit in around 50 cents to 60 cents.
Okay. Tell this audience, because I know David Splett. He's come from one of the big boys. He's nobody's fool. And his conversation with me was he wouldn't come and join any old company. So I know he's thought about this. So how the hell did you attract him?
Well, I think it was about 1.5 years ago that we started making a few changes when we were stubbing our toe and hitting some speed bumps. And most notably, we brought on Joel Murphy. And Joel is our GM down on site. And Joel was successful at Florida Canyon, being the lowest cost producer at that time. So part of the stages in this development were to look for someone that had some experience with more senior companies, mid-sized to senior companies, and we were able to start a discussion with Dave Splett and successfully brought him on board in January. And Dave's track record is second to none. Dave was the CFO for Gold Corp in South America. He was with Antamina, Mosaic, and many others. So he's had this tremendous experience on the operational side, also the financial side, and he's been instrumental in helping us restructure our balance sheet and pay down debt as we're increasing our cash flow. So we were pleased to have Dave step on board.
Yeah, I bet. Look, and what have you tasked him with doing? Okay, sorting out the balance sheet is one thing, and I think possibly giving the company a little bit of recognition on the institutional side, but what's he actually being tasked with doing on a day-to-day basis?
On a day-to-day basis, his primary role is to make sure that our cash flow and balance sheet is being optimized. So Dave and I work closely together with the guys on site. We're constantly basically in daily contact and just keeping our finances, making sure that our debt situation has been paid down. This year alone, we will have, in the 12-month period, paid down about $14 million in debt and payments, and so that's significant. We've been retiring the Sprott lending debt that was outstanding, paying down Cat Financial, and also Greenstone Resources with a convertible debenture of $8.5 million. So as we reduce that debt, the shareholder value is increasing.
Okay, so next 6 months, I know obviously COVID, everyone talks about the impacts of COVID, and I'm sure you probably know different, but next 6 months, what's the big goal for you? What are you delivering by the end of this year?
Well, we were exposed to the COVID early in March, and we had some shareholders come down on site, and one of them came down with a sickness, and we were very fortunate, though, to have implemented some measures. So I think we were ahead of the curve with mining companies, and we have not suffered any shutdowns or loss of time over this virus. So we've been fortunate in that regard. And what we're looking for here moving forward is to pay down debt, continue to increase our cash flow, and to expand our resource on site. And if we can hit some high grade along the way, which it seems we have, we just have a tremendous opportunity here to add value. And as you mentioned, we are looking at M&A opportunities. However, sometimes you look within and look at your own property and you realize that there's a tremendous upside for shareholders. And so I think that once you review our exploration results here, that'll be continuous right through to September, October, and then with a resource calculation, you're going to see some serious value being added.
Yeah, and it's just interesting times, Ken. Look, I'm glad that you guys are kind of sorting out things in-house, reorganizing a few things, and a couple of quite solid signings as well. I mean, great drill results. If this high-grade zone does continue, as far as you hope it does, it could be really good news in terms of the economics here, because I think you need to drive down that AISC, increase the resource, grow the growth opportunities, all the usual stuff. So stay in touch, pick up the phone when you've got something to say, because I think it could be the beginning of something quite nice. Well done.
Matt, thanks a lot for having us on, and appreciate the opportunity to speak with your audience and tell them a little bit about Northern Vertex and the Moss Mine. So we're looking forward to a strong future.